Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. I am recording this intraday, so as I record this video, market should be open another 3 hours. So I am recording this midday. I hope you guys had a good week trading this week. Volatility continues. Our market is down about 2%. We got the Russell and the semis down much more there. We got the Nasdaq down about 2.4%. But as you can see, year to date, these guys are still up there. 17% for the S&P. Year to date, Nasdaq 30 or 20%, semis 30% there year to date. So market is holding up its gain for the year to date or since the December lows, but we've been seeing some decline and some volatility. Market is down now. I think we're still about 6.79% since the highs. And so far, with a little bit of an up move here, about 5.6 now. So we've been tracking gaps here. So let's talk about that. What's been happening here? So, as I've been saying, and if you follow me on Twitter at 2K Kim, as I've been talking about that this gap, this little gap right here, that the gap needed to be filled. Let's actually make that has been kind of a crucial gap. So I want to actually annotate that with purple. So that gap, as I've been saying, that gap needed to be filled. And I think really there was multiple, attempts from the bulls to fill that gap. And as I've been tweeting it out, that gap needs to be filled. Otherwise, it's going to continue to struggle in that vicinity. And you can see how many times the bulls got up here to fill it. They failed, filled it, failed, trying to get up there, trying to fill that, failed, and many times it failed. And even we had a lot of shenanigan right here, as you can see. I mean, there's gap down, gapped up. We filled the entire gap. We came down, got back up, huge gap down, and a flush next day. That was what, middle of August. Or this, just about a week ago, right? And then it looked like it was gonna have a follow through to the downside. Maybe that's what bears are looking for, but there were some dip buyers came in. You can see that lower wicks there, and then it's got brought back up. We saw another gap up, and that made that into an island bottom reversal. And many times you will see a lot of up and down shenanigan. And then you see an island reversal. Usually it will hold, but we are seeing another gap down. So pretty much we've been staying sideways and seeing lots of volatility here. And that this gap remains open, and all these up gaps has been filled. So let's actually close that out. So there was the down gap today. It was quickly filled by the bulls, and then ever since then, they were not able to hang on, and then we saw dripping lower, or just flushing lower to the downside, pretty much taking everybody's stops, I think. I think a lot of people are probably accumulating, a lot of short-term traders, and then placing their stop just beneath it, and then once it took out one or two or millions, and everything just panic is happening in the short term. But we've seen this kind of short term in the, you know what I mean? If you just go back here, we've seen these kind of pullbacks. And again, just like I said last week, I feel like it's redundant for me to say same things on every pullback, right? I feel like I'm always saying the same things on every pullback. I mean, the market isn't a market until we see, Market isn't going to go up every day. So why... why be, emotional? Why be scared? Why be fearful every time when we see fast decline like that? This is just part of the game. This is part of the market. Market goes up, market comes down. It's usually more violent when it comes down. That's what scares people out. This is the main reasons why, most retail traders are bears, is because they're scared. They realize that when the bulls go up, they usually take its time to go up. But when the bears comes down, they come down fast, right? So they feel like, okay, well, I've been waiting for freaking 3 months for this game, and it was wiped out in 1 week, right? So it's because they look at things in a short term. This is why most retail traders are in bears, right? And they usually listen to these guys on YouTube and online, and they'll talk about the same things that they've been talking about pretty much since 2013 and 14 and 15 and 16. And they'll say something like, well, it's different in 2019. No, it's not. You guys are saying the same thing, what you've been saying in 2014, same things about about the dollar, about the tariff, tariff is maybe the newer thing, but there are other things going on in 2015 and 16. The interest rate, the Feds, the China. I mean, there's always been a talk about something. I think in 2016 they were talking about Greece or something, and it was a big talk about that. And then like 2013 or something, they were talking about Russia. There's always something happening. I mean, like, look at your own life. You know what I mean? Like, is your life always perfect? Is your life always everything's perfect? There's always issues in our lives. There's something always happening. So you really have to understand a big picture of things. And there's so many components that's gonna, components that moves. There's so many components and parts that moves the market. Just because your vitamin D deficiency doesn't mean you're gonna die. Right? Just because of your vitamin C deficiency doesn't mean you're gonna die, right? You might have some illness here and there, but you're gonna somehow, some way kind of get better. You're gonna supplement those later, and then you know what I mean. You get your sickness, you get your declines in your health, but you know what I mean. If you're tracking, more longer term. You're keeping your body healthy, then and you will have your illnesses, you might even have your injuries, and you might have even close calls in your life. But you realize that you can able to come back up, and you realize your body's more adamant than what most people think. And we're a fragile being, right? Our life is fragile, and market can be very fragile. You know what I mean? When it starts to come down, sometimes it can be very, very scary, because you could lose. Your market could come and stay in a bear market for a year and a half, and lose 55% of its value. Just wiping out most retail traders. And I think there's a big fear in that, right? So you really do have to understand the macro, the secular trend of things, and understand, where the economy is going in a macro way, not just what's happening right now. This is why I think most people are sad, or most people live fearful life, because they always worry about how they're going to pay this, how they're going to pay their rent. They're always thinking about short-term, negative things happening in their life. And then that's what really makes them irritated with their own life, right? And then it translates back into the market, where you trade the market just like the way you deal with your own life, right? A lot of people who have a very short-term temper, it's a very, very small thing, but they'll get really fearful, or they get really angry, or they get really upset, and you look at them and be like, why are they upset about this small issue, right? And that's kind of what's happening with these retail traders. We get these small issues happening, or like these short-term volatility, and then the world is ending, right? So I think if you understand what I'm saying, you can at least kind of, if you agree with what I'm saying, then at least you understand something about, how the market operates, right? So let's talk about it here. All the gaps are filled now, right? So this gap is crucial, and that the gap needs to be filled, and that's what's been really a big problem here. So it's just been pretty much consolidating, moving sideways here. Again, at this point, it's really 50-50. I've been talking about this 277, right? Are we going 277, or are we going to 300, right? That's, at this point, I think they had chance maybe today to maybe go up here and fill this gap, maybe a pullback. And I talked about it in the last market update video. Remember that? I said it's better for the bulls come fill this gap and then pull back and then gather itself and then get back up, versus not getting filled. If the gap doesn't get filled, that's where the downside is going to come. And or the best case scenario would have been gapping it out. We were not able to do that. We actually gapped down today, and you're seeing that this thing coming down here. So I'm still bullish. Nothing has changed. Please don't ask me if my bullish thesis has been changed. No, we pretty much moved sideways, and I said that last week. I'll say it again. My bullish thesis has not been was not changed after this kind of decline. Do you really think 6%? Oh my God, I'm so depressed. I'm gonna start I have to I gotta close out all of my longs, and I'm so scared. I'm just gonna, you know what I mean? Like, you think this is gonna make me do it when I was buying here, right? So is it not gonna do it? That's not gonna change I'm not gonna change my thesis just because we got 5% decline. All of a sudden I'm calling crash in the market. It's not going to happen. So right now, just basically, we're just at this level here. So 293, 284, right? The gaps are filled. All the gaps are filled pretty much, but we're just still staying in this level here, right? We do have that down again. That downside gap is very important. That gap, as long as the gap doesn't get filled, it's gonna be difficult. There's a little bit of up. I think on the Qs, I think that's just been filled. Let's go here. So I've been tweeting out about the gaps. So let me update you guys today. So that was island bottom reversal, right? This was an island. That is been filled. We just flushed right through. And then this gap, which was a breakaway gap, is technically, as of now, it might get filled towards the end of the day. I'm not sure. So there's a 2 gap here. Let's do this. So we got this one. Let's make that purple. And let's make this one green, right? So we got these 2 gaps, right? All these up and down gaps being filled. That gap was filled, this gap was filled, this down gap was filled, this up gap was filled. Up and down, all these gaps been getting filled. This gap, however, has not been filled. It hasn't been filled for a really long time, pretty much all throughout this month of August, right? This gap, however, has been open since middle of this month. So it's only been about a week or so. So this one's been much more. This has been much aged gap, and I think it's that much stronger because just bulls not able to fill this gap, and this bears now coming down, challenging this gap, partially filled. Same thing happened here. Okay, so you can see that this was gap. This full on gap was here to here. The partially is filled, and I talked about this on the last market update video. It is better for the gap to be filled all the way, the entirety of it, and then pull back. So it would have been better if bulls got up, filled the entirety of it, pull back maybe about halfway, gather itself again, maybe a little, consolidation or whatever, and then get up. The gap was not fully filled, and I've been saying this. If you've been following me, I talk a lot about gaps in these videos, and this is not the first time I said it. I've been saying it pretty much throughout this year. I mentioned it last year or something, But right now, bears are coming down, right? Trying to fill this gap. So same logic applies here, just the opposite way. So bulls got up, was not filled the gap entirety of it. Again, I'm not sure. There's 3 more hours to go. If this gap does not get filled entirety, we got about halfway here. Same thing happened here. The halfway was filled, but not the entirety of it. And then even though this was huge, strong move, it looked like we could maybe gap up, continue. It was not filled entirety of the next day. Bears just gapped it down, brought it all the way back down. So if we do see a bounce here, if we do see a bounce from here, and this gap does not get filled entirety of it, right? We filled halfway, but just like this gap, if this gap does not get filled and we see this thing getting back up, even now that we've been in this choppy zone, and bulls gap it up again, bulls are going to trying to get back up to fill that, get another attempt to fill this gap at around 190-ish on the Qs. We're looking at Qs now, right? On the Qs. Spider, I think it's 294 or something like that, 294, 295. So that's kind of what we're happening is there's a lot of volatility. Again, when the market is in this volatile state, sometimes it would just break a lot of these technical levels up and down. And a lot of times, that's when you focus so much on the short term, and when the volatility starts hitting like this, since what we've been doing is pretty much all throughout this month of August, what happens is, it usually passes below or above technical level. Technical level seems to not as, the market is not going to respect a lot of these technical levels when you're in a volatility, heavy volatility environment, right? So a lot of times, they're gonna ignore some of these levels. And then when the market, and I'll tell you this, once the market start to get into more of a trend, then you realize market will start to respect the levels much, much better. And I think we talked about it maybe here on the last pullback. It seems like all these technical levels, market wasn't, really respecting. And then once markets start getting back up, and same thing happened, here as well. Once the market's starting to get back into a uptrend, it tends to respect these technical levels, and it will be much more well behaved, right? Right now, it's just been very, very choppy zone. So even if I'm recording this video, as I record this video, we got, again, 2 hours and 15 minutes ago, I'm into about 16 minutes here into the video. And the bulls, bears are trying to fill this here. Again, it will be better for the bears come and fill this entirety of it. And then maybe we'll, find support, but it will be a short-term support. And then bears could trying to bring it back down to some of these lows. Again, trying to retest the lows. If bears not able to fill this gap, same scenario could happen that it happened here, right? Same scenarios that could have happened that it happened here. So I'll take a look at it towards the end of the day. Maybe I'll reprise you on Twitter at 2KKim, right? So let's see how it closes. I think it'll be important to kind of see and how it's gonna behave next week, if this gap gonna get filled or not. So we'll take a look at that. Let's quickly look at Russell 2000. Russell 2000 is back at that level of support. We're pretty much been moving sideways here after this V-shaped reversal. I think a lot of people might be looking at this as head and shoulder formation, right? They got the left shoulder, head, right shoulder, and they might draw something like this as a neckline. I wouldn't look at it like that. Usually, if you don't look at it as head and shoulder formation, usually you want to authenticate head and shoulder formation when it actually happens after a long uptrend, right? This isn't a long uptrend. We're in the middle of, like we had that, steep decline, and then we're in a recovery phase, right? We're in a recovery phase, not in a steep uptrend, and then we're forming some kind of topping pattern, right? So kind of like similar here. It's a little bit different, but pretty similar. You can see that steep decline 2016, and then if I just look at it like this, you might look at that. If I just zoom it like that, right? You might look at that as left shoulder, head, right shoulder. Especially you see this kind of gap down. Oh my God, right? Think about this. In 2016 June, you're seeing, we saw this huge decline on the Russell 2000 in 2016. And then you're seeing a gap down twice and a flush to the downside. Look at that. Just in 3 days, this thing goes, what's that? 7.34% down in 3 days. 7% on the small cap. Again, the gap downs is what scares so many people. Big gap downs, big down day, it just scares hell out of everybody, right? When you get these little tiny, short-term moves, you're like, oh, it's not as bad. I've been saying, I actually like fast decline. Do you know why? Now, let's get it over with. I can buy more on that dip, and let's get back up. Because when it's grinding, it could take months, weeks before it gets back up. It's the same analogy where, you know, you put a frog in a like very warm water, and if you slowly turn you guys know this analogy, you slowly turn the knob and get the heat up, if you slowly do it, that frog enjoys that water so much, it'll boil itself to death, right? Because you're like, oh, it's so good, and then you gotta just by slowly, you know what I mean, put up the heat for the frog to be boiled to death, because it adapt to it, it accustomed to it, and it starts to enjoy it, and then it doesn't know that until it's boiling itself. It's kind of like, you know, when we see a decline slowly like this, like everybody's a little bit more complacent, right? But I actually fear more when we see a slow decline. If you go back and if you actually study every single crashes, you're not gonna see some big gap down, not until it's a midpoint, not until the midpoint of that crash of the bear market. It starts kind of like the boiling thing that I just talked about with the frog. It starts slow. You know what I mean? That's what like Ken Fisher, right? He said that the market doesn't end with a bang, but with a whimper. Like, I think he was talking about that. He said that before, and that's the only person I would really follow. But market does not end with a bang. It actually, you know, it ends with a whimper. The bear market starts with a whimper, because then there's a complacency. It's like, it's not that much, you know, it's just a little declines, you know, just like the analogy with the frog. Investors and traders does not get scared with these little whimpers, little decline here and there. But once you start to see these huge gap downs, lots of volatility, big decline days like we're seeing today, that's when they all freak out. But like I said, I'd rather see the market seeing a big decline, big fast gap downs. You know why? Because I want to get it over with. I can buy the dip, and I want the market to just come right back up. You see how fast, right? Market just got back up, you know? Let's get back up here. So this is where we're at. You know, it's been just grinding. And if you just go back and see when the market starts to grind like that, I mean, here, same thing, it's been grinding. You guys remember in 2017 on the Russell, I've been buying this dip pretty much all the way through, and then you see how fast that move came about. And it happened after, it's all documented. You know, if you want to actually see it, it's journal, IWM calls that I did. It's all documented. You can see it made a new low. And you see how it's been just up and down. Oh, you know, see how I'll make it a little bit more. And I'll end the video with this. I'll make it more dramatic for you guys. You see how it's been like, oh, very choppy, right? Oh, yeah, it's not too bad. Oh, and the big, oh, okay. Oh, yeah, it's going back up. Oh, yeah. And then out of nowhere, right? Because it's been a lot of up and down. Look at these things. Up and down. Like, it goes down a couple days, it goes up a couple days, it goes down a couple days, it goes up a couple days. So there's a lot of complacency, a lot of up and down shenanigans. And then out of nowhere, boom, and then breaks below this level. And I use this example so many times because you guys remember, you know, a lot of you guys been following me for years. And since August 2017, do you guys remember what everybody was saying? Do you guys remember? This is a warning signal. The Russell 2000 just broke below the major support. The small caps are in danger. All these so-called gurus, teachers, experts, they're all in cash. They're just What did I do? I bought that dip. And what did the market do? Oh my God. This is why I'd rather see this than all this shenanigans. Like, let's get it over with. Come on, let's get it over with. And then boom. So, Yeah, so so I cover Spider and Q's Russell, but I want to go a little bit more in depth with things. So let's just kind of, let's do that for today. And let's see how it plays out here. We filled all these gaps, and I think market is, we've seen a lot of up and down shenanigan here. We're more sideways, but there's still, as long as we don't fill this gap, there's still risk of this market going 277. I've been saying this pretty much entire month. I am open-minded for 277. If we come 277, that would also give you a good buying opportunity. But like I said last week, when we go 277, you will be scared. You will not able to buy that dip. Same thing you probably thought when the market was going up here. You probably, you're probably regretting that you didn't buy this dip because you're scared. And finally, when this got up, either you bought it up here because you think that it cleared it, or you told yourself that next time when we see a decline, I'm gonna buy that dip. And when it actually did, it was so violent. You see how fast it came down. You're scared to buy it. So maybe you were scared to buy it here, you started buying it at the top, right? And then you're scared to buy it, maybe you're scared of buying it at the top again, right? This is why just people say stupid things online and, oh, we cleared that, so it's a buy signal. No, it's not. When you see anything clearing, nowadays everybody got charting stuff too. Everybody's looking at the same thing. They're buying this up here, and the market knows, and probably, a lot of bears maybe flip bullish with all these up and down shenanigans, and maybe with this gap up. People, I tweeted this out. When the market is up, everybody thinks that it's gonna go to the moon. When the market is down, everybody thinks that it's gonna crash, right? So, oh my God, sorry about that. So, what people usually do is they'll short here, they go long there, short here, they go long there, and then they'll constantly get chopped to death, right? Oh my, hold on a second. Sorry about that. So, so what happens is, you're chasing it up here, you're closing it out down here, you're chasing it up here, you're closing it out down here, maybe you're going long at the top, you're shorting at the lows. Just constantly market is bullying you around. And that's how you're going to be very, very frustrated in this market. So let's look at that. I think it's coming down let's look at that Q's again. It's getting filled. It looks like it's gonna get filled here. Got very small gap left. It looks like it's gonna get filled here. It will be better for bears to fill it. Fill that gap. Probably gonna act as support. But if this gap doesn't get filled, then we're probably going to, if buyers probably gonna use that opportunity to try to bring it back up, right? So let's end here. I'll take a look at this, and I'll maybe update you guys toward the end of the day, or this weekend, or early tomorrow, or early next week, or something like that. Have a wonderful weekend, and good luck trading next week.